Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up for this Thursday, and we're now at the 25th of February 2021, getting on about 6:40 p.m. Central Time. A washout day to the downside. What's going on? Well, it's certainly not government economic data. It was all bullish. I wrote about it in this morning's report. The fear in what's going on as you're adjusting to interest rates and the 10-year notes going to 1.5 and beyond. I started talking to you in January that I did a special for Bloomberg, TikTok, their program, and I said interest rates are going to creep. We have to get used to it. They're not going to gallop at you. Well, I think I was wrong on the speed. I call this pretty much a gallop. The market just keeps going every day and adding to itself, and today the market's what, near the 1.5 level? That's an important number. So as you're breaching up there, the market has to digest what is the bigger picture. The bigger picture is clearly that the public thinks, and those in the know think, that we have turned the corner on COVID. Yes, turned it, not turning. I want to tell you what financial markets are doing. They don't wait for somebody to ring the bell. Well, we now have herd immunity. They're not going to wait for that. They think the market, with all these vaccines, with hearing there's going to be 100 million doses of that, 200 million doses of this, in Chicago. Next week they're opening in the parking lot of the United Center. This is a big parking lot. It's where the Bulls play and the Hawks play. That's becoming our COVID center now for shots. So just like in Los Angeles and other areas, thousands of people are going to be able to get shots at a time. This is very important. You're picking up your momentum. It's not being lost on the market. So the market's doing its shift. The stocks that were the darlings, the Teslas, the Apples, I can go on in that thing, they're getting some pressure off them, not because they're bad. People are taking out money, I think, and putting into areas that will benefit possibly from the turnaround, the post-COVID era. Got it? That's what I think. Gold, unfortunately, doesn't win in either case. It didn't win with low interest rates, 0.6, didn't get the inflation it wants, but that's not a completely true statement either. You did go to $2,000 an ounce, right? So now you've sold off about 15% in round figures. Okay, not the worst sell-off in the world. It's waiting on real inflation. And we did get a piece of that today, and you have to dig through things to see it. Costco's going up $1 an hour immediately to $16. Now that's higher than Amazon as a minimum wage. It's higher than Target. It's higher than a lot of other places. They want to keep their employees and attract employees. Is this the beginning potential of that price war? It could be. Remember, we're hearing the Biden administration wants to get to 15 as the minimum. You're now seeing that well-to-do companies can do better than that. That's my point. I'll leave it at that. When we come to the gold market, you can see where you're at. You're under the 18-week average of closes on an area chart of just closes on a weekly basis. You have to have something in your arsenal that gives you a filter. Is the overall pattern bullish or bearish? You decide what that is. I've decided that it's that 18-week average. When the market is under it, I'm supposed to have a bearish bias. If you're under it on a daily chart, I'm supposed to have a bearish bias. When you're over it, I'm supposed to have a bullish bias. I want those filters. The filters are used once you get signals. Now here's a daily bar chart of gold. The pattern has been lower highs, lower lows. I don't know what your definition of a downtrend is. I know what mine is. I developed the Swingline Indicator because at any chart I look at, I don't want to go like here. Gee, where's the most recent high? Is it there? Is it there? You're going to say it is. Oh, folks, trust me, you get into this type of action, you don't know. In this type of action, you don't know. I've had people in rooms, where is it? I'll lay out 10 people, I get 10 different answers, or, you get what I'm saying. You can't be 10 different ones, but it's not consistent. I wanted consistency. So in the consistency, I developed an indicator many years ago called the Swingline, and it keeps me. That's what I care about, me. I love to say I care about you, but I have to care about me so I can talk to you. It helps me to define for you what is the market. It's in a downtrend. Lower highs, lower lows. Take out 18, 15, 20, and I change my opinion. It's that simple. I can give you the number. Lo and behold, on rallies, if you get to the 18-day moving average, since the filter's already down, that should be a resistance point. So what do I think? If you were tomorrow to get a big rally, I'd think that the pros are going to sell it at 1806.60 and be out if the market gets over 1815.20. They'd be selling into the resistance. But what about the support? Right below us, 1757.30. So the Bollinger Band's been doing its job. The 18-day average of closes has been doing its job. And the swing line's been doing its job, period. Then I'd go to where are the momentum indicator, the slow stochastics. Well, it's done its job too. If you come back here and you look at these oversold conditions, you're getting bounces out of them. And then you're getting the fresh selling once it clears itself. So if it gets down there again, I have every reason to believe the support will come in against that lower Bollinger Band. And no, that won't get me bullish. Nothing can get me bullish until you begin a pattern over 1815.20, and you're going to say, and I get it, that's $50, $60, that's a whole move. Why don't you pick the bottom here? Why don't you pick the bottom here? Why don't you pick the bottom there? I'll let the bottom pickers do their thing. The gold-silver ratio, another indicator. As it shrinks, it means that silver is gaining on gold. It's another part of the gold story, and it's part of the silver story. So the silver market today, what was the low today? 27.39. So you have an outside day down. Actually, this shouldn't be here. I should have two arrows pointing down. I screwed up on that. Lower high, lower low, I think you'd agree with that. Momentum trying to turn down. That doesn't change where the support is. It's 27.41.50, but no. You've stepped out of the uptrend in the market, but the bias is up versus gold's bias down. In the copper market, sooner or later, you're going to back away from this number and you're going to lose the embedded reading and get a correction. Would I tell a client when a market just went from 346 and goes up $1? This is a big move. So a market that starts there just went up approximately 35%. And I'm saying, well, I think we should buy it here because it's going to go to 5. Have a good time. That's my point. Markets can get away from you. I think it's now going to break that gorilla glue hold that it has and set in some type of correction. But that doesn't change anything. You're still over the 18-day average. To break the overall trend, you got to take out 379.65. Those are your lower lows. But if you lose, and you haven't done it, if you lose the embedded reading, I'll argue that price and that 18-day average could make a run at each other now. In the platinum, what number did you break back to? Right here. Now, here too, I should have taken this arrow and had a point down. I was rushing to get this done for you. You have a higher high, and then all of a sudden you switch to lower highs, lower low. Downtrend, but what? Over the 18-day average, and all you did is hit it tonight. You didn't hit it during the day. Went neutral again. That's what I'm saying. You pulled back to that line in the sand. In the palladium market, this arrow too, I missed these, should be up here. You should have coming down, going up. There is no trend here. Where did the market fail? How many times have I been here with you saying, folks, if it continues to rally, I'm going to look for a failure here. I also pointed out you're at that all-time high level. I've been doing it in my morning subscriber video too. You're overbought without a trend. I'm looking for resistance at that point. No, I'm not looking for a top. I don't know how to call a top. I'm looking for resistance where I think pros, if they're in this from whatever signals they have, this Bollinger Band is an important piece of work. Bingo, you hit it, and tonight this is where you're at. I'm hard at work. Today I recorded 2 more chapters of my enhanced Bollinger Band course. So tomorrow I'll be through with all the signals without an embedded reading. Then I go to the embedded reading over the weekend. I was hoping to be through by Saturday, probably going to be a little bit late into next week. So I think this will be ready for you in the first week of March or so. So I'm just about there. All right, in summation, what would I like you to do? I'd like you to help me out. I'd like you to say you either like these or you don't, and write a comment if you would on YouTube. It helps my ratings. I do this for you religiously, as you know, so please help me with that. What's the trend? Lower high, lower low. I completely missed doing this one. You're in a downtrend in this market. Nothing to do at all. Okay, are you looking for bounces? Yeah. If you take out 90, 44 and a half, what happens? You negate the downtrend, but you don't start an uptrend. You'd have a lower low, higher high, and I'd expect resistance at 90, 60. The market tried today to do well. Take a look at the failure in the euro currency. You'll see where that market also failed and to do much with itself. It had the market on the ropes. It gave up a lot of the action. I'll talk about that in a little bit. Thank you for watching. I'll see you tomorrow.